Welcome to Unit 2, and we're starting with Chapter 8. 8.1 talks about budgeting and planning, and 8.2 talks about legal agreements and record keeping. So we're starting with the financial planning basics. Before you can have a financial plan, you're going to need some income, and in order to create your budget, you obviously need to list your expenses. So they talk in this chapter about gross income being like we covered in the previous unit, same thing as gross pay, meaning the income that comes in before taxes are taken out, which would mean that the disposable income is what's able to be used to spend, to save, to invest, etc. So a financial plan is a set of goals for those three things. And so we're going to move into what an actual budget is and what an actual budget would look like. So once you have that disposable income, what can you do with it? So we're talking about spending and savings. That's what budgeting is. It deals with these two things, spending and savings, and you're using your income and your expenses to figure that out. So this is Evan Anderson's example for the month of September. He makes $320 this month at his part-time job, $20 in allowance, and apparently this is his birthday month, so he makes $40 for a birthday gift. So his total income is $380 for September. If we move over to his expenses, he has daily lunches, supplies, clothes, and entertainment. And we're thinking that Evan is a high school student or mostly maybe a first-year college student, because an adult living independently would have a lot more on this list in expenses. But in Evan's total of 4, that comes to a total of $280. So when we move down just another column, Evan is also smart enough to put some money each month into savings. In this particular month, he put $100 in his credit union account. If we get down to the bottom, we are going to see that the total expenses in the savings means that Evan's left-hand column and right-hand column are actually equal. They're balanced, and that's what we want, a balanced budget. Ideally, you would want this number to be higher, but in no case do you want this number to be higher. A balanced budget would mean that this works out, that your income covers your expenses. So when we talk about preparing a budget, we see that Evan did exactly that. He estimated his income, he estimated his expenses, he decided how much to save, and then he made sure it worked. Some of the other things you want to think about when you're balancing your budget is your fixed and or variable expenses. So like I said, in an adult budget, there's going to be a lot more than 4 categories. You're going to talk about paying rent, you're going to talk about your car payment and your car insurance. There's also going to be a column for other things like your cable bill, your phone bill, a utilities bill. It gets a little complicated when you actually move out on your own. So fixed expenses are certain expenses that you can predict because they stay the same from month to month. Your rent and your car payment are 2 examples of that. Variable expenses are a little bit harder to budget for because they could change from month to month. If you have a heating bill or an electric bill that changes in different weather temperatures, so it's colder, you turn your heat on, that bill will go up, or maybe your electric bill goes up in the summer because you have your air conditioning running. Groceries are definitely a variable expense. One month you have a family party, so you have to buy a lot of food. The next month you're out of town, so you don't have to buy any food. So these are definitely 2 things to consider when you're creating your monthly budget, and 2 things to be aware of. Moving on to something called a net worth statement. This is how you can tell someone's worth. And the 2 main words you want to get to know here, because you'll hear them in other chapters, are the words assets and liabilities. So what you're doing is you're taking your assets, which are the things that you own outright, and you're subtracting your liabilities, which are your debts. So when you subtract this number from this number, what you get is a net worth, or someone's net worth statement. So we're going to look at an example real quick. This is Anissa Newkirk's example, and here are the things that Anissa says are her assets: her checking account, her savings account, her car value, and personal property. In total, Anissa says that she has $9,300. If you look over at the liabilities column, which again are our debts, she still does have some debt left on her car. So although $3,000 is in the assets value, that's how much she's paid in, she still owes the dealership or the loan provider $1,800. And as a lot of us have done in our lives, she took a loan out from her parents, so she owes them $100. So Anissa's total liability is $1,900. In the net worth statement, like we saw in the equation in the previous slide, you subtract the liabilities from the assets. So you would take 9,300 and minus 1,900, and we get $7,400. That's what we would say her net worth is. In order to figure this all out, to make sure that you're right, you can go back and say, if I take the total liabilities, which is 1,900, and I take the net worth, which is 7,400, these two numbers together should equal 9,300, which was the original asset value. So you can kind of do a check to make sure that your math is right. But all in all, if we wanted to know Anissa's net worth, she would be 7,400. You can Google celebrities right now, pause the video and check it out and see what are the net worths of Beyonce or a specific athlete, or maybe if you go through and find out, someone who has created something like a Steve Jobs or a Warren Buffett, even if you could find that online. Obviously, you're never going to get to the penny because their income and investments are constantly changing, but you can get an idea of their net worth from Googling. Moving on to 8.2, we start getting into the legality and the agreements section of this chapter. So hopefully we've all heard of the term contract before, and we know that it's an agreement. It could be between two or more people, and the chapter or section in 8.2 gives you some common legal agreements that you should be familiar with. You apply for a credit card, that's an agreement. When you take out a loan for a mortgage or you take out a loan for a car, that's an agreement. When you sign a lease to rent a place, you fill out a contract. So we're going to talk more about these contracts specifically in each chapter, but you will be familiar with these throughout your life. And we go down to these two terms, which are also covered in the chapter, and these are also types of contracts: an oral contract or a written contract. And then there's also an implied contract. So see 8.2 for more information on the specifics of these. But what we really want to talk about is what are the details parts of a contract. And one of the main parts of a contract is the agreement. When one person makes an offer and another person changes it, the second person is making a counter offer. So if you've watched any of the shows that deal with pawning in a pawn shop, they tend to make counter offers. I want you to buy this from me for $500. Well, how about $450? That back and forth is different counter offers until an agreement is come to, until both parties agree, and that's when an actual agreement has been made, which can turn into a contract. A contract can be argued in court and is considered null or void when there's a mistake in the agreement or paperwork, when fraud is present, or duress, meaning the person was threatened to sign, or undue influence. And sometimes that's parental influence or other things like the influence of drugs or things of that sort. And you can find out more information about that if you read the section that is entitled Contractual Capacity. So that is something to be aware of. Consideration is something of value exchanged for something else of value. So for example, you tell someone that you're going to mow their lawn, so you are providing them with a service and they are providing you with a payment, and that would be considered something that would be falling under this example. And that consideration is also a type of agreement because there is a offer and the offer is accepted and it's followed through on. So if one person received something but the other person did not pay up, the contract may not be enforceable. Moving on a little bit more in legality, we're talking about notary and notarization, which you probably aren't familiar with because most teenagers haven't had things notarized, but they do mention it in 8.2. And a notary is a person that actually has to go through a program and become a notary. You become a certified notary, and then people would pay you to certify that a document is legal, and you would sign that in front of the notary would stamp the document, and that notary would be confirming that, no one was holding a gun to your head or threatening you, or you weren't under the influence of any substances, that you were in your right mind when you signed this agreement. So a lot of times that is the final step to make a contract legal, so to speak. They talk about a negotiable instrument in 8.2. this is a written promise to pay. So a check would be considered a negotiable instrument, a promissory note, which is similar to a check. And then they talk about a cosigner as well, because if you choose to go into a legal binding agreement and you promise to pay with a cosigner, that person is responsible for your debt. A lot of times teenagers don't have the credit. Credit score is something we'll touch on in another chapter, but you need a certain amount of credit to be able to take out certain loans. So sometimes if you want to take out like a car loan, but you can't because you don't have the credit, your parents would be considered a cosigner. So they're signing on this contract with you to pay, and if you don't pay, it falls on them. The last legality thing mentioned in this section is a warranty, also known as a guarantee, and it's just the promise, again, a legal agreement that your product or service is going to be up to par, and if not, and it's no fault of your own, if it just stops working, you can go ahead and follow through with some warranty steps to see if you get reimbursed or if you get a new product. It depends on what we're talking about as to what the specific details of the warranty are. But you've definitely heard like Apple Cares is the Apple iPhone or Apple products form of a warranty. So a lot of us are already familiar with that. Last but not least, the chapter ends with the idea of personal record keeping, just to remind you that you should be collecting all these files. So when you fill out a contract, or when you get your credit card statements, or when you go ahead and fill out all the paperwork you would need to get a loan for a house, that's all things that you should be saving and organizing to look back on for whatever reason. It's very important if you fail to make a payment, or if you make a payment and they fail to credit your account, you need to go back and have this paperwork to prove that it was in fact paid. So this is chapter 8. It is the first one in our unit 2. Make sure, as always, to read chapter 8 in more detail. Make sure you look for the highlighted words, italicized words, headers, etc., to make sure that you are fully prepared when chapter 8 appears on our final exam.